All right, this was breaking news here in the last hour. The Federal Reserve announcing a quarter-point interest rate cut. That's the first rate cut in 9 months, the first one this year. Federal Reserve Chair Jerome Powell hinting that slowing job growth could prompt more cuts on the way. Joining us now is economy reporter and business insider Allie Kelly with the latest. It seems as though Jay Powell did not really want to do this, and yet there was an 11-to-1 vote to make it happen.
Absolutely. There has been a strategy so far this year. The Fed has held rates steady for 5 consecutive meetings. So today's cut is the first of the year. And in a lot of ways, this was expected. Markets had kind of priced it in. And what we're seeing is something that will trickle down to consumers and how they pay for their mortgages and auto loans and credit and things like that.
All right, let's talk about that, because that one dissenting vote wanted a larger rate cut. But the Fed chairman saying you've got to balance a little bit of where we are in the economy with the jobs report showing that employment is kind of settled and we're not seeing as much movement there. But at the same time, if you make too much of an adjustment there, prices just escalate and they go through the roof. So what do we know right now about this 0.25% cut and what that means for mortgages, for car loans, et cetera?
Absolutely. Like you mentioned, the Fed is kind of easing their way into a policy change based on what they found out from stubborn inflation that is slightly above that 2% goal. And then also we've seen major job revisions where there have been nearly 1 million fewer jobs added this summer than we expected or than we kind of had initially thought. And for that reason, the Fed is thinking about how can we alleviate the stress on the economy by making this cut. One single quarter-point basis cut like we're seeing today is a start. It is not going to have a major impact on the way that people pay for housing and pay for cars and stuff like that. That's going to be something that we would maybe see with a sustained pattern of cuts over time. And based on the economic projections, that's something that's very possible. We could see more rate cuts this year.
Okay, so we know that the Fed's going to have 2 more meetings, one next month in October, another one in December. To your point, did they signal that potentially another quarter could come in either of these meetings? And what, again, so we don't think mortgage rates are going to move at all?
I think it's unlikely that there will be a substantial shift that American homeowners would really feel. Something that is important to watch out for the rest of the year, though, is if we see those next 2 meetings, if there's another basis point cut, or it's somewhat unlikely, but there is a half-point cut, something bigger like that, that is something that over time people would see their borrowing costs for homes go down, because that would be cheaper for borrowers and banks in the first place. Any
other headline from today's meeting other than the obvious, which was that quarter point there? But did the Fed say anything about the economy other than what we know about jobs? Anything about recession? Any talks like that?
There has not been any sort of red flags for a recession. We are definitely seeing this job market outlook is far worse than the Fed thought it was when they made their last decision in July, which really drove that cut today of we are in this delicate balance where the economy isn't as stable as maybe we thought it was. And then, the Fed has also had to contend with a lot of political pressure from the Trump administration and also from a lot of, investors calling for a cut. And that's something that Jerome Powell was very vocal in the press conference today on maintaining Fed independence, but we could continue to see that pressure from the White House on top of the Fed.
And we've seen stocks at all-time high, and I just looked over the corner of my eye to see where we were, and it seemed like it dipped a little bit, but the Dow still up, the NASDAQ down a little bit. So clearly we're seeing people and things oscillate as we approach the closing there of the market, the stock market, in reaction to what the chairman did. We'll wait and see for that October meeting. Allie, thanks for the latest.
Thank you so much.
Stay with us. When we come back, vaping, the crackdown on vaping at schools, what we're learning about alarms and checks in place. Are they working? Are they not? We'll talk about it when we come back.